Hi, this is Stephen from MAP, and this is a recap of our coffee morning that took place on Thursday, the 8th of December. This was not our normal webinar format. This was actually a great discussion between the participants and myself. So it was not recorded to kind of encourage that conversation and to protect the confidentiality of the people who were responding in the chat. So to start with, I'll go briefly through the MAP benefits package, then we'll move into where to start and some hints and tips, and also looking a little bit at costings and then suggestions and answers section. So to start with, we had a poll. The question was, do you currently provide benefits? And the majority of respondents said that they either do not or they do not know if they provide a benefits package, with the remainder saying that they did currently provide benefits, but they were looking at expanding their provision. This lines up with our previous poll from the payroll webinar, where 75% of respondents did actually say that they were considering increasing the size of their benefits package. Here at MAP, we do actually offer a benefits package to all mappers. I'm going to go through it in the order that it was entered, which is a brief explanation of what is involved. We did have quite a few questions during this section, just for clarification, so I'll be providing those too. To start with, every mapper gets an additional day of annual leave so that they can have their birthday off. As well as a gift for each mapper for their birthday, they can take either the day of their birthday off or a Friday or a Monday if it falls at the weekend. Now this is elective, so you don't actually have to do it, but you can book it off if you wish to book it off. But it is an additional day of annual leave. That was one of the questions in the room, whether or not this was a day that was extra on top of the statutory allowance, and the answer is yes. The next couple are all interlinked. So firstly, we have the holiday loyalty bonus. So MAP is very much an investor in people, and we will bring on apprentices. We do bring on people who perhaps don't have all their paper quals yet, but do have the experience and do have the aptitude that we're looking for. The holiday loyalty bonus is given to team members who are qualified. They get 25 days holiday, and for a part qualified person, you start on 20 days holiday, but then you earn an additional day for every year in service, up to 5 years, which then levels you out with the fully qualified staff members. If in that 5-year period you do achieve your qualifications, you will jump up to 25 days, the same as a fully qualified staff member. This is because we also offer fully funded study support. This includes the cost of registration to the professional body, annual membership fees to the professional body, exam fees and study fees, all of which are considered tax-free, so long as the training is role relevant, which for us, it absolutely is. In addition to the fully funded study support, we have an extra day of annual leave per module whilst we're studying for paid study leave. So per module, you can have a day off for revision. And if your exam falls on a weekday, you can have a day off for your exam. Again, this is elective. You might not need it, you might need it. Personally, I haven't used it in my first module because I am studying currently through MAP, but I have definitely used it for my second module because I've got an exam coming up and I feel like I'm going to need a day to just kind of concentrate and focus to get my head right beforehand. Next up, we have the Health Shield Cash Plan. Now, this is a cash plan. It's not a private medical insurance. This provides money back up to an annual limit for everyday medical expenses like optical, dental, and physio, which covers the duty of care as an employer as our team works on screens and also helps to fast-track diagnosis of symptoms as diagnostic tests are also covered. It also provides access to counselling services and GP appointments, and there are also courses in the wellness area which help with things like quitting smoking, sleep issues, and other wellness concerns. So we are actually allowed to choose the level of cover for ourselves and whether or not we have any dependents on the cover so that they can access the same provision that we can. So Health Shield is actually a taxable benefit and it is declared through P11Ds. So perks, this was an ancillary benefit. So because we use the HR software, Charlie HR, and because we use Health Shield, we actually gain access through those platforms to a discount and kind of reward software package. So this is a really great just secondary thing that we didn't even pay for as a particular extra, but it has benefited our team. The discounts in particular, through Charlie HR, we can access up to 30,000 brands. We offer a gym membership to all staff. Now we have a corporate pure gym account, or if there is a better gym near you, or you just don't have a pure gym nearby, you can choose to use a different gym, in which case you get up to the cost of £30 per month. Now MAP does actually cover this, and although it's not a free gym, in essence, it is an extremely discounted gym. So personally, my gym membership is around about £25 per month, but through MAP, it only costs me around about £15 per year, which is a huge reduction in terms of the amount of money that I'm spending, which frees it up for other cost of living benefits, because it's something that I genuinely enjoy and it's something that I do anyway. Next up, we have the Christmas shutdown, which is another annual leave related benefit. So these 3 days are on top of the annual leave allowance, but unlike the additional day for your birthday or for study days, this is completely non-negotiable. It is a shutdown. The office is closed. You have to use these extra 3 days on top of your 25 days to simply be at home with your family and enjoy Christmas. A more recent addition is hybrid working, but we have formalised our policy this year. So for our hybrid working policy, we have any staff member can work up to 60% of the time in a month remotely, so long as they are in the office for 40% of the time. And then finally, our newest thing that we brought in is group life cover. This covers our team for 4 times of their annual salary should anything happen to them. It's not the traditional death and service. No one has to wheel us into the office to make sure that we die in the right place. We are covered 4 times of our salary if something happens to us, which means that we're either incapable of breathing or incapable of working for the foreseeable. So we do actually get that cover. It is a really, really great thing to put in place, particularly as it is quite cheap for a business, but also because it is completely tax-free. Our benefits package is not the most expensive or extravagant. We've only got 2 taxable benefits in there, and nothing particularly that is flashy, but it is a really great way to encourage the work-life balance for our team. So where to start? Whether you're starting from scratch or you already have a package in place, you should consider your own team and your agency's goals and culture. Talk to your team and ask them what areas they feel that there could be an improvement in, and look at what your peers are offering. Benchmark your roles against your direct competitors and against people who you directly work with. Build a wish list first, then check the costs. When it comes to benefits, it is much better to work the pie in the sky way around. If you focus just purely on the costs, you're not going to build this out very dynamically, and you may miss things that could potentially be really big benefit. Whereas if you look at what you're looking to put in place first and you work backwards from there, not only can you find more affordable alternatives, but you might find even better alternatives in the process of trying to actually make the wish list a reality. Some really good key points to focus on, as I mentioned in the blog post that we put up earlier this year. Flexibility, finances, well-being, and progression. These are the 4 things that employees really look at and really consider when they're looking at roles and looking at working and developing themselves throughout their career progression. 69% of businesses increased their focus on staff well-being in 2021, and 36% of businesses expected this to increase further in 2022. So costings, time versus money. Not every benefit that staff value comes with a financial cost. Some benefits can be implemented for the cost of some extra admin time in your HR processes, or be offered through an arrangement with a third party, such as freebies or vouchers, for example. Benefits are primarily about the attraction and retention of staff, and the cost of each should be compared with the costs of turnover, absence, and burnout. According to a study by Oxford Finance and Unum, the average cost of staff turnover per role in the UK is around about £30,000. This factors in the reduced productivity of staff during their first 6 to 8 months and the cost of reallocating workloads whilst roles are vacant. In terms of benefits with the financial cost of the business, these fall under 3 main categories. There are your taxable benefits, such as health insurance, gym membership, electric cars, subscriptions, and non-work related training. There are non-taxables, such as pension payments, working from home allowance, and work-related training. And then there are things considered as gifts and expenses, such as Christmas parties, work socials, travel expenses, long service awards, and gifts, obviously. The way that these are treated for tax is different. Obviously, the non-taxable ones don't need declaring, but taxable and gifts and expenses are generally declared through separate means. So to look at a recent example that we've had in through a query, an employer would like to give all employees a bonus of £300 for Christmas. The cost through payroll for just straight up paying a bonus would depend on the employee, but will be considered in addition to earnings, so it's a cash bonus, meaning that the employee would not get the full value of the payment. The employee would pay income tax and NI, and the employer would pay employer's NI. This approach favours low earners who do not pay tax, but higher earners will not feel the benefit, so they won't get the value of the full £300. Giving the bonus as a value of a gift card would transfer the tax due to the employer. So this way the employee gets the full value of the gift, but the tax will be due on the full amount. The gift valued at £300 of a lower rate taxpayer would be, so it'd be around about 75% of tax, 51.75 of employer's NI, so the total cost for each £300 gift card goes up to £426.75, which is an increase for around about 42%. The additional cost could catch you as it scales if it's not factored in correctly. So paying a cash bonus is the employer-centric approach. You're literally giving extra money, but it is going to save the business more money ultimately, whereas giving a gift card is the employee-centric approach. From an employee perspective, they actually get more of the benefit, but then it costs you more money. So now for suggestions and answers. So in this section, we had more of a wider discussion about the kinds of benefits that people were looking at putting in place. There was a lot of interest in the kind of quote unquote free benefits related to annual leave, because annual leave is a really big attractor for people, particularly if you can offer a more competitive offering than your peers. If there are two identical roles with two identical salaries, people are much more likely to go with the one that gives them more time off. So here we have some suggestions and answers. So these are suggestions of things that are listed in HMRC's big list of taxable and non-taxable benefits. So we have flexi-time, which allows staff to work and bank hours, flexible home working, medical insurance, gym memberships, role-based training, non-role-based training, team building events, working from home allowances, spa treatments, wellbeing days, season tickets and travel, work attire, clothing vouchers, payroll savings schemes, credit union partnerships, company cars, and additional annual leave. All the items that are highlighted in our lovely raspberry red are the items that we actually offer as part of our benefits package directly, but through our perks and HR system, we also have access to spa treatments and wellbeing days. Now, one of the things that was picked up here was the payroll savings schemes and the credit union partnerships. So payroll savings schemes, this is where part of your salary, your net salary, is deducted and paid straight into a savings scheme of your choice. You just simply have to provide your employer with the bank details and you can make this request, and payroll can either facilitate this through the wages payment process, or you can do it yourself post net pay. We can add this to the payslip as a net deduction, so it is visible and trackable. How this is generally implemented is it's simply a case of the employer takes the money and pays it straight into an account for you so that you can't spend it. However, some employers actually do choose to give a little bit of an incentive here, and then they also add an amount to the payroll savings scheme as well. So they will do a little top up, which is considered a cash payment and is paid through payroll as an addition to the wages, and whatever is left when the net payment is what is paid through into the savings scheme. Employers can start partnerships with credit unions. What credit unions do is they allow for loans and credit arrangements to be put in place and repaid through payroll. So it's actually much more possible for people who have poor credit ratings or poor credit histories to get a good loan or a mortgage or even a credit card through a credit union partnership which operates through the workplace. These are both options that you can put in place to help your staff achieve their own financial maturity, but they are things that are relatively low impact and quite easy to get started. As this was in December and as people are still thinking about it, you can host staff events which count as a benefit. You can host an annual event for staff that is non-taxable so long as you do not spend more than £150 per head. This is, however, more like an annual allowance, as you can actually split the event into 2 or more so long as the total amount you're spending for staff entertainment in a year is less than £150. So you could, for example, do a summer barbecue for £50 a head, and then do your Christmas do for £100 per head, and those both count as one annual event and they both count as below the tax threshold. With staff events as well, it also depends on the mixture. So we had a recent query come through related to a kind of training development day, which also had fun elements involved as well. This training and development day had kind of a tricky tax setup in terms of there were certain parts of the day that were 100% tax-free, the role-based training. There were other parts of the development day which were focused on training soft skills. So the events look on paper like staff events, but because they're there for soft skills, they were actually training events, so they were considered tax-free. But then they had the entertainment in the evening. Once the actual cost of the event was factored out properly, it was below the thresholds. They were able to have this really great development and training day, which was non-taxable. So when it comes to staff events, the kind of established practice is that a staff event would be dealt with through a PSA, a POA settlement agreement, whereas staff benefits such as medical insurance and gym memberships would be dealt with through a P11D. That is because elective benefits like medical insurance and the gym membership are things that staff can opt in or out of, and they can choose to do. So it's a personal tax issue, and therefore they personally pay the tax due. Whereas with staff events, this is something that the company is putting on. So it wouldn't really be fair for each individual to bear the tax burden themselves. So instead, the company should bear the tax burden because this is something that the organisation wants to do rather than necessarily the individuals. The individuals benefit from it, but it doesn't encourage a good uptake if the tax burden is personal. So we had another poll here. What is holding you back with benefits? Now, the majority of respondents said that what was holding them back was kind of just like thinking about the costing. And then there was a part 2 to the question which asked what kind of benefits would you be looking at providing? And the majority of respondents stated that they'd be looking at providing things to do around annual leave and also things to do around insurance, which is a really good way of getting your toe in the water of benefits. So I have some examples of queries that we've had through recently and also queries that were asked in the room. One of the queries was related to kind of a little known tax-free benefit, which is related to financial advice. Now, in your automatic enrolment year, you can offer to pay for financial advice up to a cap of £500 per employee, which is tax-free. This financial advice is intended for them to discuss their pension prospects and talk about pensions, but honestly, you don't have to police the conversation. And so long as that is the premise of why the person has come in to talk to them, they can actually talk about whatever really they want in that session because it's confidential and it's private to them. Now, this is little known because it is something that is not very well publicized, and it is something that people are looking to take advantage of. Now, so far as the query goes, it was related to whether or not the automatic enrolment year is the company-wide one or if it's the individual one. What this means is the company-wide one is every 3 years from your duty start date, and the answer is yes. In your automatic enrolment year for your company, all staff can access this allowance if they wish to. As for an individual, so say for example, I've just started this year, technically this is my automatic enrolment year, and you could feasibly say that as someone who started midway through the process, you could pay for it for me as well. However, that does get a little bit tricky to keep track of, so it's probably much better if you just stick to your own automatic enrolment cycle rather than doing each individual person as they come in. The next question kind of came back to the annual leave allowances. So there was a question about a holiday benefit, which there was a bit of a buzz around a few years ago, which was to do with unlimited annual leave. Now, with unlimited annual leave, you're basically allowing staff to take as many days off in a year as they want. This immediately sounds like everyone's going to take the absolute Michael, but in reality, what most companies were seeing is that people were not taking enough annual leave. And so, in addition to the unlimited aspect of it, they had to bring in a mandatory enforcement of annual leave, because in the UK, you must take as much of your annual leave as possible, and your employer must make every effort to make sure you take your annual leave as much as possible. So there will be some employees that you literally have to force to take a couple of weeks off to make sure that they've had their time off. And with unlimited annual leave, it's actually more a case of people take fewer holidays than more, because they're no longer concerned about losing their allowance, so they don't really think about the time frame. So as a benefit to bring in, it is essentially free. You do have to factor in the fact that some people will absolutely take advantage of it and you barely see them, whereas other people won't, and you'll start to run into the whole sweated labour aspect of the workplace. A more practical approach is to just simply increase the annual leave allowance by a quantifiable amount. Definitely look at giving as much annual leave as you can afford to give, as this will give your roles the greatest attractiveness to new employees. However, you can do as we do, and you can kind of label these in a different way. So one of our extra days is for our birthday. We have the Christmas shutdown. These are extra annual leave days, but they're also days that are kind of fixed in place, as it were, for each person. In addition to unlimited annual leave and annual leave days, there is perhaps one of the greatest, easiest free benefits to implement with purchase of additional annual leave days. This allows staff to buy extra annual leave days. And what they're basically effectively doing is they're buying a day of unpaid leave from you. Now, staff respond to this incredibly favourably. It is one of the most requested setups for annual leave in companies that do not have it in place. It doesn't work for every organisation, but it is something that is very easy and very quick to bring into place, which will immediately make your staff feel like they've got some kind of bargaining power and they've got actually the ability to take extra time if they need it. So we next had a question about training relevancy. So this is a distinction between hard training skills and soft training skills. So hard skills are things that are role relevant. They're usually more formal, classroom related training, things that you can measure with exams, assignments, etc. Whereas soft skills are interpersonal skills, they're people skills. They are things that are required for cohesion. Now, cohesion training is perhaps best done outside of a classroom setting. Usually it's some kind of shared experience, kind of event. It could even be like a free lunch if you wish to. And the question around this was basically, how do you kind of do the audit trail? So in order to track this one, you just simply have to set clear learning objectives and also learning outcomes with some kind of reflective piece on how you felt that the day went. This is generally considered by HMRC to be sufficient evidence, but you may need to look into this just a little bit more for your organisation. Finally, we had a question about help with transport costs. So transport costs is a particularly tricky one in that you can't pay for your employees' commute. That's considered just a cash benefit. You can, however, pay for travel expenses which are related to the operation of the business. One of the ways that you can look at this is if you are based in a city, for example, if you're based in like London or Manchester, it could very easily be conceivable that a Metro card would be considered something that could be used during the course of the business day, particularly if you have a lot of clients and you go out on client visits. That would be something that you could pay for as a staff benefit. However, A rail card to allow someone to come from a rural area into the city, which only allows really one route, would be considered a choice. It's a commuter expense. If you were in a situation where you were moving your office, because that's a company decision, you could conceivably argue that travel expenses into that new office were not something that staff signed up to. They were not something that they were aware of when they started the role. So those could be treated as a benefit, and you could offer some kind of financial incentive towards that. But then after your office is in place, any new staff coming into the business, they would not be treated the same way, as HMRC would see that they've chosen to do that and they've chosen to take those costs on. So you wouldn't be able to support them in the same way with travel costs. You can choose to pay your staff for whatever you want within reason. So if you chose to give all of your staff just literally a cash bonus to help towards travel expenses, that is something that is possible. But because it is a cash bonus, it would need to go through payroll. It's treated just the same way as salaries and earnings. And as mentioned previously, people in the higher tax brackets don't generally benefit the same way that people in the lower tax brackets do. So in conclusion for today, benefits needn't cost you any money. There are plenty of things that you can put in place to improve the attractiveness of your roles, which we can help you with through payroll. There are plenty of things that you can put in place that just require some extra HR time. And there are things that you can put in place that are non-taxable, that carry long-lasting benefits and have a fantastic effect on increasing your staff's retention, and you're reducing your turnover costs and your turnover in general. Thank you very much for listening, and thank you for all those of you who were able to attend. Our next coffee morning will be arranged at some point in the near future. Coffee mornings are designed to be more of a conversation and a discussion, and they're based on topics and queries that we are repeatedly being asked by various different clients. And it's about bringing those clients together so that they can kind of workshop ideas and listen to each other and discuss what's worked and what hasn't worked potentially. The conversation that we had, there was a lot of back and forth between people that already had packages in place and people who were considering things, and there was a great deal of ideas sharing. So I do recommend attending the next coffee morning that we have. It may not be on the same topic. So the topics that we'll be discussing at these mornings and the people that will be in attendance really depends on you guys. So if there is something that you want to discuss, if there's something that you'd like to kind of explore, then let us know and we'll look into whether or not we can put together another group of people just to sit down, discuss, have a nice chat, and really workshop some ideas. Thank you very much again for viewing, and I look forward to hearing from you. If you have any questions or queries, please do not hesitate to get in touch with the payroll team or myself directly. This has been Stephen from MAP.